Hi guys, this is Mark Shawson, the Pattern Trader. For the last 10 years, we've had an enormous bull run in the US dollar, which means that the euro versus the US dollar cratered in that time frame from a 160 price level to about 103. But I do believe that this bull run is over. I've been saying this for many weeks now. At the height of the pandemic in March, everybody was rushing into the US dollars, selling their assets and rushing for safety. And I believe that this created an enormous bull trap where everybody chasing the dollar got trapped at the highs. And now the US dollar has turned substantially lower. And I think it's just the start. So if we examine the trends in the US dollar, I'll go to the charts in just a moment. You'll see that the runs last for 5, 8, 10 years, which means that the recent turn lower in the US dollar could last for months and years, as I fully expect it to do so. So that we are at an enormous inflection point. This means that there are serious opportunities for trading against the US dollar, particularly in the Australian dollar versus the US dollar. So this was one of the weakest currencies, dropping from 95 all the way to 54 in the pandemic, and now we're trading substantially higher. And we put on a trading price pattern that I'll go to in the market that implies that we're going to go seriously higher in the Australian dollar versus the US dollar. So with that said, I'm going to go to the real-time charts and show you what I am referring to. So as I said in my video, I believe that the US dollar is at a serious inflection point and likely to turn lower, despite the fact that we have been in an enormous bull trend. So you can see for the past 10 years, the US dollar has been in an enormous uptrend. But when you look at this move in cadence with the long-term charts, and what I'm referring to here is that we have a 42-year chart of the US dollar index. And so when we look at the US dollar index over a long period of time, and this is why I favor bigger time frames. I don't trade on 15-minute charts or 1-hour charts. I only look at daily, weekly, and monthly, and then even long-term charts to try and put in perspective what is really happening to understand the cards that you're holding. And so despite the fact that we've had this enormous bull run in the US dollar, you can see it has been tracking within the cadence of a descending triangle price pattern. So while we have had an enormous run in the US dollar index, you can see that we have a case of lower highs. So we hit a much higher high in 1980, then we hit another high in 2000, and then we've hit another high in 2020. But you can see that each high, each peak has been lower than the rest. And so I believe that we are tracking within the cadence of this long-term triangle, which the implications that the US dollar is going to go much lower. So as I said, when these trends start occurring, you can see that they happen over a long period of time. Again, with reference to the long-term tracking of the US dollar, you can see that we had an enormous 10-year run in the dollar here. Then we had another 10-year run, a collapse here. And then we had another 10-year run here, and then another 10-year run here, another 10-year run there. And so now that the dollar is starting to weaken, which implies that we are looking at perhaps an enormous run lower over a long period of time. In this chart, I'm looking at the US dollar index on a weekly chart. And now you can see how the US dollar index has topped against that major trend line. So we have a double top price formation on the weekly, but again, if you remember back to the trend line, the declining trend line on that descending triangle price pattern on the long-term 43-year chart of the dollar, you can see that we are peaking. We have this double top price level that implies that the US dollar is going to go lower. Now, in addition to the recent double top, we also have a head and shoulders price formation. A head and shoulders is exactly what it sounds like. It looks like a man or woman's left shoulder. The peak would be the head, and this is the right shoulder. And recently we've cratered through the neckline. We retested it last week, and now it looks like we're going back in the direction as indicated by these very bearish price patterns. The double top along the long-term trend line, as well as the head and shoulders price pattern. This implies a reversal. So remember, we've had a 10-year run in the US dollar index. Now we have a head and shoulders price pattern, which is a reversal pattern, which signals that now the dollar is going to be thrown in reverse and start going lower. Now, while I expect the US dollar to decline against most major currency pairs, the layup to me right now seems to be long Australian dollar versus the US dollar. So if we expect the dollar to weaken, then the Australian dollar versus the US dollar trading pair should go higher. Now, I am looking at a weekly chart. Now, what we saw is during the pandemic, the Australian dollar cratered below this long-term support level around the 66 price level. But you can see that it was a bear trap because if you chase this lower, now you're caught. And so this looks like a short squeeze, a bear trap, whatever you want to call it. But in addition, we have this very meaningful looking inverted head and shoulders. So this is just an upside down version of what we saw on the US dollar index, where you have a head and shoulders. But what's happening here is that the right shoulder is higher than the left shoulder. So what this implies is now we have a rising or upsloping neckline. So the implications of this upsloping neckline, and a neckline is simply a line that is drawn through the entirety of the pattern. So we have this very bullish inverted head and shoulders price pattern with a sloping neckline. And because it's sloping, this implies not only is this bullish, but it's likely to go very, very quickly once it clears the top part of this neckline around the 76 price level. So I hope you got a ton of value, a ton of input from this video. If you'd like to understand a little bit more how I capitalize on monster moves in the market and my trading methodology, then I highly suggest you download my weekly video report. The weekly video report is available for any price you want to pay. So you nominate the price, you determine what value you want to derive from it, and then just click the link below this video. So with that said, I wish you a healthy and prosperous trading week, and I'll see you next time.